What's going on, guys? Philip at Trade Genius. We're going to talk about the Bitcoin price as far as mining costs go. And there's a analytics firm, TradeBlock. They're predicting that the Bitcoin mining costs will be over $12,500 following the halving. So I wanted to talk to you guys about the implications of that going forward in the next cycle. Before we do dive into that, just a reminder that we do have a special ending this weekend, 40% off on our indicators in the store, and also our specials. If you want to get into the room with us, it's $3.99 for 12 months. Had a really good week trading the Forex. We had faded this move on the yen and got this bounce in the pound. And so that's just one of the things we do in the room. Bob also takes care of the equity side, ETFs, and we got a couple good trades going on crypto as well as AGI and REN popping off. So encourage you guys to check us out in the room. Again, head over to our website, tradegenius.co, and check out our specials.
Trade Genius.
Okay, guys, so analytics firm TradeBlock predicts Bitcoin mining costs are over $12,500 following the halving. Now, what they're doing is they're taking a look at the reduction in the halving or in the block reward, which gets cut in half. That's why we call it the halving, going from 12.5 Bitcoin every 10 minutes for the reward to 6.25 every 10 minutes. So very large disinflationary mechanism in play. So they take a look at various things. They're looking at the hash rate, right? So when they're factoring in how much it costs to mine a Bitcoin, hash rate is important. And we'll take a look at that chart too, and talk about the strategy going into halving a little bit more. Current costs are estimated to be around 6,800. So that's the mean, right? Because everyone has higher and lower electrical rates. It's a variable. It could be as low as 3,800 in some regions in China and well into the 8,000s for others. But the mean is 6,800, and we saw that being at the last floor on this last pullback. So it's important to understand where these mining costs are. It's important to follow these reports because they typically will hold the floor for the price of Bitcoin. But now they're claiming that this cost is going to increase to over 12,500. So it kind of makes sense because you're going to have a cost of from 6,800 to 12,500 because your reward is being cut in half. So that makes sense. The estimated break-even costs indicate the miners are continuing to increase resources toward the network despite what is set to become a cost increase following the halving. This suggests that miners are likely expecting the price of Bitcoin to rise to higher levels around the halving, allowing them to continue to generate a profit. So that's kind of what I was talking about earlier. We'll take a look at the graph, and this is our capitulation graph that also has our hash rate and difficulty. You'll notice that hash rate, as we talked about, should rise into halving because now's the time to upgrade your equipment while your halving reward is still high. You really don't want to be doing that post halving when your reward is cut in half, your income is cut in half. You can afford to get that done now. Plus, when you get the new machines online, you are mining at a faster rate, so you're increasing your share of that block reward, that higher block reward. So you're incentivized to do this now before the halving where that drops off. A little interesting here on our hash ribbons that it's getting close to crossing back over, and we typically would see that after a pullback, right? So they don't necessarily signal a pullback, but they would confirm that a bottom is being put in. So it's interesting to see that we haven't really pulled back. Like here, when it started to capitulate, we rolled over, okay, after pulling back. Here was the bottom after we're pulling back. We're actually moving up from this most recent bottom. So it's interesting to see that the bands are starting to pinch here. We'll see how that plays out. Like I said in the last video, we'll keep an eye on that. But the thing that I'm keying in on is the hash rate rising and the BTC difficulty rising. So going forward, what that report and the math behind it is implying is that our floor really is going to be up here as we start to move higher post halving. So again, I think Bitcoin can get crazy. You can obviously see really fast moves. I mean, look at this move right in September of 17. And this is largely on retail volume. We go from $4,000 to almost 20K, right? So, you could certainly see a very large move into halving. I know we're looking at the 11,800 area gap close, but honestly, we could, if things really start to get going on the bull cycle run here, you could see an attack of these upper levels. So just keep that in mind. But obviously the first target in front of us is the 11,800. But I think that that bottom being reportedly north of 12K, I think gives you some idea of where really support will be going forward post-halving for Bitcoin, and why these, we look at the cycle repeat graph and things like that, and how that really kind of plays into that narrative of a grind higher after halving and ultimately taking out these all-time highs. So there's my take on that, guys. Just something to be aware of, just the dynamics around halving. It's a very unique process. Really nothing like it with regards to Bitcoin and any other commodity. So it's pretty interesting stuff, pretty exciting. All right, guys, that's it for this video. Please hit like and subscribe. I will see you on the next one. Thanks for watching. Bye.
Trade Genius.